As Washington remains focused on what's next for President Biden, our next guest says that financials would be one of the clearest sector winners if former President Trump were to win. Joining us now is Tobin Marcus, the head of policy and politics at Wolfe Research. Tobin, it's interesting, some of your analysis, and it's like, well, if President Biden continues to be the nominee, you feel more comfortable recommending financial stocks, which would benefit from Trump, and we'll go into the reasons why. But even if he is replaced by, let's say, Vice President Harris, you still think Trump has an edge, but on the one hand, 70% probability, with Vice President Harris, 55%. So it's the same trade, but you're just less certain about making the trade.
Yeah, that's right. I think you have to start. Starting with Biden, I think you have to look at Trump as a quite clear favorite over Biden. At this point, the polling's deteriorated significantly. Voters obviously have a lot of concerns. You know, looking at Harris, there's a lot more uncertainty, so that pushes you back towards 50-50 on the odds, I think. And you know, she's got more upside. Certainly, it's easier to imagine her mounting a vigorous campaign and closing the gap, but Trump still has been ahead all year. She's polling only a little bit ahead of Biden. So I think it makes sense to start him as having a slight edge. And yeah, looking forward, you know, financials, I think, are one of the clearest winners, along with traditional energy. Crypto also certainly a sector that stands to benefit from a Trump win. You know, I think, you know, from a financials perspective, there's a mix of you know, regulatory tailwinds, antitrust easing up will be a big, you know, benefit for the sector. It's also traditionally one of the sectors that outperforms, so I think there's some market muscle memory there. But you know, I think there's not, you know, even as people get more and more confident that Trump is a clear favorite, we're not really seeing enough conviction for people to go ahead and put most of those trades on. And certainly in my conversations with investors across the street, I think most people are still in scenario planning mode rather than reacting to the kind of ups and downs of polls or the ups and downs of this saga with Biden by going ahead and, you know, sort of slamming trades in anticipation. Well,
that's it in a nutshell. All you got to do is watch the betting sites for who the Democratic nominee is going to be. I've seen it move 20 points in an instant based on a letter that President Biden writes or a Morning Joe call-in or whatever. So I don't know how you make concrete decisions in the stock market about it. Some of the other interesting things, Tobin, the move higher in the 10-year yield based on the inflationary implications of 10% tariffs or Trump tariffs or whatever you want to call it, that's actually kind of dissipated and gone away. Although you still think if it was Trump that you would see higher 10-year yields but a flatter yield curve.
Yeah, that's right. So, you know, when people were trying to point to, you know, how are markets reacting to the debate, this sort of seismic shift that we saw in the race, one of the things that we saw a lot of commentary pointing to was this, you know, 15, 20-point backup in the 10-year, which, you know, that did react, or there was a move, I suppose, but that move has since reversed. And we've seen that, I mean, the 10-year has been on a roller coaster for the past 9 months. When it's up, you know, people talk about deficits. When it's back down, they don't. So I think there's been a lot of narrative following price on that one. And it's a little bit challenging for me to look at that and see a convincing move in response to the debate. But yeah, I mean, looking ahead, I think that the consensus in markets is for a higher 10-year. That, you know, we hear from pretty much everyone we talk to. The debate, I think, is more at the short end of the yield curve, where, you know, I think a lot of people are expecting some steepening from Trump. Our view is that given the uncertainty about his tariffs policy, the fact that the Fed won't necessarily want to either hike or cut into it, and I think you do have to have some level of apprehension about cutting into something that could generate a big upward level shock to prices, that probably, you know, sort of slows the pace of Fed cuts relative to counterfactual in 25 and 26, which should put some upward pressure on the front end and mean a slightly flatter curve overall.
We had someone on yesterday, and, you know, I have senior moments, I guess, too, but they actually made the point that, yeah, for one day in the year, I would find myself voting for Trump just because I think it would be better for business overall. I think it was someone in Sun Valley. They're more or less saying that, you know, the prerequisite, yeah, I don't like anything about this guy, but for business, you know, you hear that a lot from in certain circles, and more this time. around, I think, where you almost have some people conceding that maybe as a business person, some of the regulatory issues, taxes, energy, they almost find themselves that they have to come down on that side. And they're not quite as embarrassed about it this year, Tobin. Overall, do you see that as just corporate leaders might be, usually they're quiet, but maybe they'd be out in the open by just saying, I think the Trump policies would be better overall?
Yeah, so I mean, it certainly depends what you're focused on. There are certain areas where he has a kind of, quote unquote, pro-business agenda. Again, like lots of deregulation, much easier antitrust environment on tap. So to the extent that those are your priorities, like I do think there's a big difference between the parties. And I think that there's been less reticence from investors in particular to come out and say that they're thinking about supporting Trump. Interestingly, there has not been as much of that dynamic among corporate leaders. There's sort of a news cycle a few weeks ago about how no Fortune 500 CEOs have come out supporting him.
I don't know. That report. I don't know how many of the Fortune 500 CEOs were actually polled for that report, and how many of them are willing to say they're giving to Biden. Same amount.
Yeah, no, it's not that they're supporting Biden.
They have customers. They have customers. Yeah. They have customers on both sides of the aisle.
Exactly.
So
that's what I mean.
You have to be crazy to say anything.
Right. So but that's what I mean. Like, I think there is still more political sensitivity about taking a clear side. I mean, to your point, either direction, from folks who have customers, who have employees, who have kind of stakeholders they need to manage, as opposed to, sort of financial industry titans who are a little bit more, independently operating.
Someone, a CEO, a big one, told me that it's like a wildebeest. A wildebeest, you stay in the middle of the pack, and the lions come around. There's almost no way you're going to get eaten. The minute you leave the pack and you're out in the open, you're toast. You're dead. Why go out and say something when you got all those customers and employees and everybody else? You'd have to be insane.